All right, so today we're going to be taking a deep dive into Ally Financial's Q4 2024 earnings call.
Okay, sounds good.
We're going to really unpack what's going on beneath the surface.
Yeah.
You know, not just looking at those headline numbers, but really dissecting those intriguing little details that give us a real feel for this company's, strategic moves.
Right.
Are you ready to become an Ally Financial whiz in the next few minutes?
I'm ready. Let's do it.
All right.
I'm excited for this one.
Okay, so let's set the stage with the big picture.
Yeah.
Ally's adjusted EPS landed at $2.35 for 2024.
Okay.
With core pre-tax income hitting $1 billion.
Right.
And revenues reaching $8.2 billion.
Nice.
Those are some pretty solid numbers, wouldn't you say?
They are. Yeah, pretty good numbers for sure.
But what really stands out to me is CEO Michael Rhodes' focus on what he calls core franchises.
Okay.
Dealer financial services,
Right.
corporate finance, and deposits. Ally is actually divesting from their credit card business and hitting pause on new mortgage originations.
Interesting.
That's a pretty bold move.
It is very bold.
When you think about it,
Yeah.
what's the rationale behind this strategic streamlining?
Well, I think
It seems counterintuitive at a first glance.
definitely a little counterintuitive, but I think it makes sense when you look at the numbers.
Okay.
It's all about maximizing returns by, concentrating your resources on what you do best.
Yeah.
What you have an edge over your competition in.
Makes sense.
And so they're really doubling down on their strengths.
Yeah.
Aiming for optimal profitability. It's a classic do what you do best strategy.
Yeah.
And it looks like it's working out for them.
So let's break down these core franchises and see how they're actually performing.
Okay.
Dealer financial services seems to be their bread and butter.
Yeah.
And I hear they had a record year.
They did have a record year.
Okay, so tell me about it.
So Dealer Financial Services processed 14.6 million applications this year.
Wow.
That's a lot.
That is a lot.
And their origination yield hit 10.4%.
Okay.
So origination yield is basically like the profit margin on the loans that they're making.
Makes sense.
So a higher yield means more money for Ally.
Yeah, that's pretty impressive.
Yeah,
But high volume doesn't always mean high quality, right?
that's true.
What about the creditworthiness of these borrowers?
So that's actually where it gets even more interesting.
Okay.
A significant chunk, 44% to be exact, of these loans went to borrowers in the highest credit quality tier.
Wow.
That's really good.
So they're being pretty picky about who they lend to.
They are, yeah. They're carefully selecting who they're lending to.
Okay, smart move. Especially in this economy, yeah.
Especially in this economic climate.
Yeah.
So not just chasing volume, but focusing on quality borrowers as well.
Exactly.
What about their corporate finance segment?
Okay. Corporate finance.
How did that perform?
Corporate finance is another bright spot.
Okay.
They had a record year as well.
Yeah. They delivered record pre-tax income exceeding $400 million.
That's fantastic.
And they achieved a remarkable 37% return on equity.
Wow.
Which essentially means they're generating 37 cents in profit for every dollar invested by shareholders.
That's a phenomenal return.
It is, yeah.
Any red flags in this segment, or is it all smooth sailing?
So get this, 0 net charge-offs.
Oh, 0.
That's unheard of.
Really?
Yeah.
Especially in today's economic environment.
Exactly.
That really speaks to the quality of their loan book and their risk management strategies.
It really does, yeah.
All right, let's move on to deposits.
Okay.
Their third core franchise.
Yep.
This is an area where they've consistently performed well.
Consistently.
So what can you tell me about it?
All right. So Ally's deposit franchise continues to be a strong point.
Okay.
They added over 230,000 new customers in 2024.
Wow.
Bringing their total to 3.3 million depositors.
That's incredible.
And their customer retention rate is sitting above 95%.
Wow.
Which is phenomenal.
Those are some seriously impressive numbers.
Yeah.
What's the secret sauce behind such high customer loyalty?
I think it's a combination of factors.
Okay.
Competitive rates are definitely a factor.
Yep.
But Ally's going beyond that. They're
Right.
building real customer relationships
Right.
through best-in-class digital features and products that offer genuine value beyond just interest. So they're really investing in the customer experience, making it seamless and user-friendly. And that resonates with today's tech-savvy consumer.
So it's about creating a comprehensive banking experience.
That's exactly it.
That keeps customers coming back for more.
Right.
Now, before we get too carried away with all the positives,
Okay.
we need to address the elephant in the room.
Okay.
I'm talking about credit quality.
Okay.
Specifically, the fact that net charge-offs were up slightly this year.
Uh-huh.
Should we be concerned about this trend?
That's a good question. So while it's true that net charge-offs saw a small uptick, there are some encouraging underlying trends.
Yep. Yeah.
Ally's witnessing improvements in consumer performance,
Right.
which leads them to project a normalization of charge-offs below 2% in the near future.
Okay, that's good.
Also, those problematic loans from 2022
Right.
are gradually being resolved as the loan portfolio turns over.
Makes sense.
So, it's not all doom and gloom.
That's definitely reassuring.
Yeah.
It seems like they're actively managing those potential risks.
They are, yeah.
Okay, let's switch gears and talk about their capital allocation strategy.
All right.
They mentioned having excess capital on hand.
Mhm.
So how are they planning to use it?
Okay, so they've outlined 3 key areas.
Okay.
Fueling growth in those core businesses we've been discussing.
Right.
Potentially restructuring their securities portfolio to capture higher yields.
Okay.
And drumroll, please, share buybacks.
Ooh, share buybacks. Everyone loves share buybacks.
Yeah, they're always a crowd pleaser.
They could be a very effective way to return value to shareholders,
Right.
especially when a company believes its stock is undervalued.
Exactly. It suggests that Ally sees its own stock as a good investment right now.
All right, so we've covered the big picture, the core franchises,
Yep.
the slight uptick in charge-offs,
Right.
and their capital allocation plan.
Uh-huh.
All of this paints a fairly optimistic picture for Ally, wouldn't you say?
I think so. Yeah, I'm pretty optimistic about Ally.
But let's not forget the looming question mark of the overall economic outlook.
Right.
We're still facing a volatile macroeconomic environment with inflation concerns and the possibility of a recession down the road.
Mm.
This could definitely impact consumer spending and borrowing habits,
Absolutely.
potentially leading to higher delinquencies and charge-offs in the future.
It's a real possibility.
So how is Ally preparing for these potential headwinds?
So from what I gathered during the earnings call,
Okay.
Ally's taking a very proactive and measured approach. They've already implemented several risk mitigation strategies,
Like what?
including tightening underwriting standards
Okay.
and adjusting repossession timing,
Interesting.
aiming to help more people keep their cars.
So that's good.
Yeah, so they're really trying to be proactive about it.
It sounds like they're learning from the challenges they faced in 2024,
They are, yeah.
particularly with those elevated delinquencies.
It seems like they're taking the right steps.
Right.
They're leveraging data and analytics to refine their collections processes,
Interesting.
enhance communication with borrowers, and provide more flexible payment options like modifications and extensions.
So they're trying to work with people.
They are.
Yeah.
Yeah, they're trying to strike a balance between supporting struggling customers while also protecting their bottom line.
Yeah. That's a delicate balancing act.
It is.
All right. So we've talked strategy and risk management,
Mm-hmm.
but what about the actual numbers for 2025?
Okay, so for 2025,
What are their projections?
they're forecasting a net interest margin of about 3.4% to 3.5%.
Okay.
Keep in mind that selling the credit card business will slightly impact this figure.
Right, because they're losing those higher yielding credit card receivables.
Exactly.
But you mentioned earlier that the sale would also reduce expenses and credit costs.
Right.
So does it all kind of even out in the end?
That's exactly the idea. It's a strategic trade-off.
Okay.
Even without the card business, Ally still expects to see significant margin expansion in 2025 and beyond.
That makes sense.
Yeah.
And what about their projected retail auto net charge-offs?
So for retail auto net charge-offs, they're
Yeah.
projecting a range between 2% and 2.25%,
Okay.
which seems pretty healthy considering the uncertain economic landscape.
Yeah, for sure.
And remember, their long-term goal is to normalize charge-offs below 2%.
Right.
So their projections are very much in line with that objective.
That's good to hear.
Yeah.
Now, it's clear that Ally isn't solely focused on profits. They also emphasize their commitment to environmental, social, and governance,
Uh-huh.
or ESG principles.
Yeah. ESG is becoming increasingly important these days.
This is becoming increasingly important for both investors and consumers,
Absolutely.
and Ally seems to be taking it seriously.
They are, yeah. They've already made considerable progress in areas like sustainable financing and community development,
Okay.
which aligns with their commitment to social responsibility.
And their efforts are being recognized.
They are.
They've received an outstanding rating under the Community Reinvestment Act for 3 years in a row.
That's impressive.
This designation is achieved by fewer than 15% of banks,
Wow.
which highlights their dedication to serving their communities.
Yeah, it really does.
That's a truly impressive accomplishment
It is.
and underscores their commitment to social impact.
Absolutely.
Now, we can't talk about Ally without mentioning their digital-first strategy, can we?
We can't.
They're often viewed as a pioneer in this space,
Yeah, they are.
especially with their all-digital bank.
Their digital prowess is a major advantage in today's landscape.
You're right.
They've invested heavily in technology and user experience,
Yeah.
building a seamless and intuitive platform for their customers.
This approach is attracting a new generation of tech-savvy customers
Absolutely.
who prefer the convenience and flexibility of banking on their phones or computers.
It's all about meeting customers where they are
Yeah.
and giving them the digital tools they demand.
This deep dive has been incredibly insightful,
It has. Yeah.
giving us a clear look at Ali's strategic vision and commitment to growth, profitability, and customer satisfaction.
Definitely.
What's your overall takeaway from this earnings call?
My overall takeaway is that Ally is positioning itself for long-term success
Okay.
by streamlining operations, concentrating on its core strengths,
Uh-huh.
and fully embracing a digital-first approach.
Mm-hmm.
They're not shying away from challenges,
Right.
but tackling potential risks head-on while also seizing opportunities.
Yeah.
It's clear they have a well-defined plan and are executing it effectively.
I love that perspective.
Yeah.
They're not just trying to survive. They're
Yeah.
actively thriving
Yeah.
in a constantly evolving financial landscape.
Exactly.
Now, before we wrap things up, let's indulge in our favorite segment.
Okay.
This is not financial advice.
All right. I love this segment.
Time to brainstorm an outrageous but plausible trade idea inspired by Ali's latest moves.
Let's do it. I've got some ideas.
Okay, what do you got?
So, given Ally's emphasis on higher yielding assets and their expectation of normalized charge-offs,
Okay.
what if we consider a long position in Ally Financial stock
Okay.
paired with a short position in a company heavily reliant on lower yielding mortgages?
That's an interesting proposition.
It is.
Walk me through the logic here.
So essentially, we're betting on Ally's strategic shift towards higher yielding assets like auto and corporate loans.
Okay.
Simultaneously, we're hedging against potential risks in the broader mortgage market by shorting a company with significant exposure to those lower yielding mortgages.
So if Ali thrives with its focus on higher returns,
Right.
and the mortgage market experiences some headwinds,
Right.
this trade could potentially amplify those gains, right?
That's the idea.
Okay, that makes sense.
It's a bit of a gamble, but it could pay off.
But of course, dear listeners,
Yeah.
we have to add our standard disclaimer here.
Of course.
This is purely hypothetical,
Right.
not actual financial advice.
Absolutely.
Always do your own research.
Yep.
Consult with a financial professional
Uh-huh.
and make informed investment decisions.
Yeah, don't just take our word for it.
All right, getting back to Ali.
Okay.
One thing that struck me during this deep dive
Yeah.
is how they're not just talking the talk when it comes to social responsibility.
They're walking the walk.
They're really walking the walk,
Yeah.
especially with their outstanding Community Reinvestment Act rating.
Yeah, that rating really highlights their dedication to community development and equitable lending practices.
You're absolutely right.
It's a testament to their commitment to serving a wide range of communities and
Yeah.
fostering financial inclusion.
And that's not just good for their image.
Right.
It's also increasingly important for attracting investors who prioritize ESG factors.
Absolutely. More and more investors are looking beyond just financial returns and considering a company's social and environmental impact.
Exactly.
Ally seems to be ahead of the curve in that regard.
Now, another area where they're excelling is their digital-first strategy.
Oh, yeah.
They're often considered a leader in this space,
For sure.
particularly with their all-digital banking platform.
Their digital capabilities are truly impressive
Yeah.
and a key differentiator in today's competitive landscape.
They've invested heavily in creating a seamless, user-friendly digital experience for their customers,
Right.
which is particularly appealing to a younger, tech-savvy demographic.
Exactly.
It seems like you're really hitting the mark with those customers who prefer the convenience and flexibility of managing their finances online. And it's not just about basic banking transactions.
Right.
They're leveraging technology to offer a wide range of financial products and services, creating a comprehensive digital ecosystem that caters to the needs of the modern consumer.
They're really setting the standard.
This deep dive has been really eye-opening,
It has.
revealing how Ally is strategically navigating a complex and ever-changing financial landscape.
Yeah, they're doing a great job.
They're streamlining operations,
Uh-huh.
focusing on their core strengths,
Right.
and embracing technology to drive growth and customer satisfaction.
And they're committed to social responsibility.
They are, which is
Yeah.
great to see.
They're demonstrating a remarkable ability to adapt to evolving consumer preferences
Yeah.
and industry trends.
They're not just reacting to changes,
Right.
but actively shaping the future of financial services.
That's a great way to put it.
They're creating their own wave.
So as we wrap up our deep dive into Ally Financial's Q4 2024 earnings call,
Okay.
what key takeaways should our listeners keep in mind? I think the key takeaways are that Ally is strategically positioning itself for long-term success
Okay.
by focusing on higher-yielding assets,
Right.
effectively managing risks,
Uh-huh.
and embracing technology to enhance the customer experience.
Yeah.
They're also demonstrating a genuine commitment to social responsibility,
Yeah.
which is increasingly important for both customers and investors.
It's a compelling story of a company that's not only achieving strong financial performance,
Right.
but also striving to make a positive impact.
Yeah, they're a company to watch for sure.
Now, as we always like to do, let's leave our listeners with a thought-provoking question.
All right, let's get them thinking.
How do you think Ally's strategic shift, towards a more focused business model
Right.
and their emphasis on digital innovation
Yeah,
will impact the competitive landscape in the financial services industry?
that's a really good question.
Will other players follow their lead or stick
Hmm.
to more traditional diversified approaches?
Well, Ally is definitely shaking things up
Yeah.
and challenging the conventional wisdom in the industry.
Yeah, they're kind of going against the grain.
They are.
They're doing pretty well.
They are.
So it'll be interesting to see if others follow suit.
I think their success with this streamlined, digitally driven approach could definitely inspire others
Yeah, for sure.
to, at least rethink their strategies.
It'll be fascinating to watch how this all unfolds in the coming years.
It will.
The financial services landscape is constantly evolving,
They're always changing.
and it seems like Ally is determined to be at the forefront of that evolution.
I think they are.
So they're not content with just keeping pace.
Right.
They're aiming to set the pace.
Exactly.
And with their focus on innovation,
Mm-hmm.
customer experience,
Mm-hmm.
and social responsibility,
Mm-hmm.
they're well positioned to do just that.
I think so.
Well, this deep dive has been incredibly enlightening.
It has been.
I feel like I've gained a much deeper understanding of Ally Financial,
Good.
their strategic vision, and their potential for future growth.
Yeah, they're a fascinating company.
And to our listeners,
yes.
we hope you found this exploration of Ally Financial's Q4 2024 earnings call informative and engaging.
Okay, I hope so.
As always,
Yeah,
we encourage you to continue your own research
please do.
and stay curious about the ever-changing world of finance.
Absolutely. There's always something new to learn.
Until next time, happy investing.
Yeah.